Alright, what's going on, you guys? Um, okay, I think I got all my settings set up on OBS better. You guys can see the full screen now without seeing that black portion. So, in today's video, basically, I just want to go over, because I see a lot of you guys asking, how do I scalp with the supply and demand strategy? Because usually we're charting higher time frame zones. So, when you're scalping, you're usually playing in the direction of the trend, not really playing the reversal. Because usually when we're playing the zones, we're playing the reversal essentially. Because if we're playing, for example, right here, I got Tesla pulled up right now. If we're playing back, this was Thursday when we played this 4-hour demand. Essentially, we were catching the reversal. So for scalping, you're essentially playing in the direction of the trend. So see, this was Thursday. So for scalping, you essentially want to train your eyes to see uh, the specific supply and demand zone patterns happen before time, if that makes sense. So let me explain. Um, Let me find good examples. Friday, and Carmen has made a video on this. So you guys you guys, hold on, I'm in the Discord. Hold on. Okay, so Carmen has made a video on how to scalp with the supply and demand zone strategy. It's fire. Go check that out. So I just kind of want to elaborate and go a little bit more in depth and add a little bit more uh, of technicals to add further confirmation to play the scalps. So let's see. Did Tesla have any rally? Essentially it did. Okay, right here. Okay, so Tesla, we opened up Friday. Okay, so I actually took this. So let me just show you guys. This wasn't based on, these are just some technical patterns that I like to use to help me scalp. So you guys see this right here. This is a little channel that had formed on the 1 minute. So you would take the high here of this pivot, connect the trend line as many touches as you want to try to get the resistance trend line to touch as many pivot highs as it touches. So what I mean by that is, okay, it touched here, or this was the start of it. It touched here in this area, pulled back down, touched this area here, and now this is what I was watching right at market open. So this is a 1 minute. So when you're on the 1 minute and you're trying to play something on the opening as an opening drive, you got to be super quick. You can't second guess yourself because you'll miss a good portion of the move. So I saw this little channel forming on Tesla. Um, so you can even draw the support side of it. So what I'm looking at here is I'm not looking to connect the 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 bodies of the candles. I'm looking to connect the wicks because essentially, so as you guys all know, there's retail traders and then there's like algo traders and then there's fucking like investors trading, whole bunch of people trading, right? But essentially, when these wicks, they're basically like algos not letting, they're like certain points. So the algos have picked up on this resistance trend line, right? So now the algos are going to be set to buy here at this support, and then it's going to be set to buy at this support. Same here on this resistance trend line. Okay, so once this second pivot has formed, okay, this is a resistance trend line. Now the algos are set to short this here with the wicks. You can see the wick. Look at this wick right here. It perfectly touched this resistance trend line and this support trend line. So this is like, this isn't just the retail. like just making this wick. This is like an algo. So now, okay, I identified that. So now this is what I'm looking at Tesla for right at the open. So I see once Tesla opens, it dips down. It's a red candle right now. Once it opens, it dips down, and then it becomes a green candle, like kind of like a hammer. So that tells me, okay, they faked out all the shorts as we're coming down. We break this little low right here. We trapped the shorts, and now they got a cover because market makers and hold on, and big money traders made price rise. So now the shorts got a cover. So I took this here. I had a great entry. Took this here right at like 6:30. I didn't even wait until 6:31. I hopped in right at 6:30. So entry here at 6:30 a.m. So and then price rallied. I was up a good amount here, but now uh you can see this huge ass red candle on this is a 1 minute time frame. As price was forming, this was a huge red candle at one point. So to be honest, I was sized in a little too heavy considering the fact that it was 0 days till expiration. I was sized in about 1500 here. So on 0 days till expiration on Tesla, that shit's moving quick. So right here, I was up about 700, 800 bucks. So and then down here, I was down about literally 200 bucks. So this kind of freaked me out a little bit. So I actually exited here for a loss of like 200 bucks because I was I didn't want to be because I was just trying to catch this momentum move. I thought Tesla was gonna have a smooth momentum drive right out of this channel, but you guys can see how choppy this was. All this, you can see how choppy it was on the way up. So even if I did hold through that, premiums wouldn't have moved how I would have expected them to because all of the red candles that were forming in between were literally penetrating really deep into these green momentum candles. And that's kind of something that you guys will understand as you guys trade options a little more, especially on Tesla. Premiums are jacked on 0 days till expiration. But so that was one play. That was just a technical pattern breakout. That's something I like to play a lot. And then let's see, where else did I play? Um, where did I play Tesla, man? Played it here somewhere. Hold on, let me pull up the damn. I think I actually played it here. Yeah, I did. So played it around 12. So I was watching. Let's make it a little bigger so you guys can clearly see what I was looking at. So this was about 12 Pacific Standard Time. So I was looking at this right here. We have like a little triangle forming. So connect the highs. Look for the most touches in the pivots, which would have been roughly about here. And mind you, I'm super like OCD with my stuff. Like in my room, I have to have everything a certain way. Um, when I organize stuff, I'm like a super organized person. So with these technical patterns, I like to be as precise as possible. And I'm not just gonna come in here and draw it like this. Like that shit will give me mad OCD. So I kind of like to perfect these resistance trend lines and support trend lines, which I think is a bonus, but to each their own. I'm not really tripping. You do you. Okay. So now I'm looking at this. I'm like, plus, mind you, I usually have the TTM squeeze pulled up too, and Tesla was in a mad 5 minute squeeze. We were also in a 15-minute squeeze, and then we were also uh, releasing from a 1 minute squeeze. So, what you want to do in these kinds of patterns, like symmetrical triangle patterns, and I think it's just my style of trading. I'm a little bit more aggressive than probably most people are, but let me just show you what my mentality in these triangles when they're forming. So essentially, when a triangle is forming, we have price comes down, touches the support trend line. Let me make this white. Save as default. And then we have price come up here, price come back here, price comes here, price comes here, and now we get the breakout, right? Most people would wait to buy in here after the breakout happens. But in my mind, when I'm trading, I'm looking at this and I'm thinking to myself, how can I get the lowest how can I get the tightest risk to reward that will allow me to catch the breakout of this triangle? So what I mean by that is most people are going to look at this triangle and be like, okay, I'm just going to wait for the breakout, right? Which would they would probably buy somewhere around here. But for me, that's that's too late for me. In my mind, I think I did actually. Let me see. Let me see my exact timed entry. Hold on, give me 1 second. Phil Tesla 12:10. Yep. Okay. Just where I thought. So let me make this a little larger so you guys can see what I'm talking about. Actually, let me maximize this. Okay, there we go. Just clear things up. Okay. So now we got the triangle forming. I want to get the tightest risk to reward. So where am I planning to enter? I'm not planning to enter here because on, for example, today, 0 days till expiration, if you wait to get in here and you're just catching this little move, this is probably like 50%. But I entered here. Let me get an arrow. I entered right here. Let me make it like this. I entered here in this area after I got confirmation of this bounce. Now with my stop here, now my risk to reward is from here down to here, right? This is basically, if I were to make this red, this would be my stop loss area. This is my stop loss area. And now if I'm looking for the breakout, I'm probably looking for Tesla to double this move, the size of this move. So the size of the move is $1.52. So if we just 1R that, $1.52 was about here. Yes, and you guys can see where it stopped. So it's basically like 1R. So this is what I mean. If you would have waited to get in here, your 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 proper stop would have had to have been the previous pivot low. Because if you're just making your stop like just below right where you entered, that that doesn't make sense because you gotta give the trade some room to breathe. You can't expect to risk nothing to make something. Sorry, you can't expect to not risk anything in order to make some gains, if that makes sense. So if you would have entered here, your stop would have had to been down here, or even the proper stop would have still been at the previous pivot low. So that's kind of my thesis behind playing some of these patterns. If you're looking for breakouts, you don't you if you're catching the breakout, yeah, you're gonna have some success, but you're not gonna be maximizing on the potential gains that you could be making. Okay? So aside from that, this is just technical patterns. So that was a play I did on Tesla. This play on 0 days to expiration netted me about 70%. If I would have gotten around here, this probably would have been like 40%. But I was able to precisely time my entry with a tight risk to reward, and I was able to net about 70%. The contract went from like a buck 5 up to like a buck 87. So it was like a 74% move. Times that by however many contracts you want to put in there, and you can see the type of gain that is. So BA was hot today too. They had news. So let's see what BA did. See what BA did on a 5 minute. All right. So we kind of held VWAP all day. This is clean. This is clean. So price is this is what Carmen is talking about when scalping supply and demand. You want to train your eyes to see these rallies and see these drops right at VWAP, and then look at these bases that form right at VWAP. And you can't be scared to enter on these either. This is why you gotta have proper position sizing, and you gotta train your eyes to see this happen real time. Or not even happen real time. You gotta train your eyes to see it before it even happens. Extend this, and look, this is a clean 5 minute uh, demand, which we touched here. So even if you missed this, we touched it one more time. Entry is here with stop at the low of the wick, and that's a clean run. So as I mentioned before, if you guys watched my previous video, the one on how to effectively um, plot zones quick and how to post your charts up for review, I mentioned in that video that for most of the time you guys will find basing candles at turning points in the stock. So basically we rallied. This is a turning point, pivot, 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 pivoted here, pivoted here. These are all turning points, right? So look at this. At the 21, we made another demand zone. Green, so we rallied, we based with this 5 minute red basing. And as I had mentioned before, I like my basing candles to include the low of the pivot. So this candle right here is including the low of the pivot. So this is a higher high, higher low, lower high because we didn't get higher than this one, but it's still a higher low because we still got above previous low. So now this is technically a turning point before the stock rallied. So this is a valid 5 minute demand. Extend it to the 28th. And there you go. You got to see this happen real time, and you can't be scared to take it. Even just say we don't know future price action, right? And you see this form. As you see the 5 minute candle forming, the next one candle forming, and it what the hell? I'm trying to go. Okay, there we go. Give me 1 second. Okay, there we go. So we see this red basing candle. We don't know its demand yet because we don't know what the next candle is going to be like. So once you see the next 5-minute candle open, you see that, but in real time, you would have already trained your eyes to see that happen. If the stock is opening green, you're gonna see the ask. You're gonna see buyers stepping in and sellers um, um, sellers stepping off the ask, letting off of the ask, enabling the stock to go higher. So you would have trained your eyes to see this happen in real time, and you would have, you kind of, I think Carmen has already a good eye for this. So if he probably would have seen this happening, he probably would have entered this before the green candle engulfed the red basing. But just to be on the safe side, you guys typically want to wait for the green candle to fully engulf the red candle to take this long. Because usually what will happen sometimes, if you get a little too aggressive, green, so just say this was like a 5-minute candle, right? But this is only 3 minutes worth of time before the 5 minute even closes. So the 3 minute candle can be up here, but for the next 2 minutes, price can drop. So you just got faked out thinking this is a red basing, and then it just drops. So that's why you gotta wait for confirmation too. That's why it's really important. But if you were to get aggressive with this, you can just enter at the break of previous red candle basing, anticipating that this is going to turn into a demand zone with the stop at the low of the red basing candle, and price never got to your stop level. So this is a clean trade. This is on 0 days to expiration. This is a clean 20-30% move. And then here. So we never touched this demand zone again. We're still above VWAP. We crack the 21 a little bit, but now look at this. You guys, this is combining resist or trend lines alongside with your zones. So look at this. We have a clean trend line here. Probably looks a little bit cleaner on the 1 minute. Yep. So remember, you want to get as most touches as possible. So I don't have a touch here, so I want a touch here. So I'm probably going to move it to here. Yep. That looks clean. So what happened here? We have a resistance trend line form. So now people are thinking, okay, let me just short at the resistance trend line. So they're shorting, shorting, shorting. Price goes lower, comes back up, tries to break, can't break, short. Comes up, cracks it a little bit, no volume. So you get short, and then look at this. Volume starts to increase slowly, slowly, plus you get that breakout. On the 5 minute, this adds extra conviction because now we have a red basing with a green engulfing candle. So this would have been a clean play. This is how you guys gotta combine those trend lines with these demand zone breaks. Inversely, this could also be this. Just think of this scenario reversed for supply zones. So price would be so. Just imagine this is your supply zone, right? Price would be coming here. So now what can you draw? Trend line connecting all the lows. Got a trend line here. And now, if this is a supply zone, you're going to be short biased because you're expecting sellers to get their sell orders filled, overtaking the market, pushing the price lower. So now if you start to see this happen, it starts to go lower. This is double conviction that the short play will go in your favor because now you have a resistance trend line breaking, plus you had supply zone above. So now stop would be here. And there's your play. You can manage how you would want to manage your trade. So combining these supply and demand zones with resistance trend lines is one of my favorite things to do, especially when scalping. When I'm scalping, I'm usually on a 1 minute time frame, but these work especially well on the 5 minute time frame too, the trend lines. But you will what you'll sometimes find is that these trend lines, the patterns forming the trend line will look a little bit cleaner on the 1 minute time frame. Because you can see here, this made a trend line, right? But it doesn't look clean. It kind of looks messy. But when I drilled down to the 1 minute time frame, it looked clean. You can see all the touches and you can see the resistance trend line clear. And this is why you don't want to trade in a vacuum either. This this clutter right here, you wouldn't know that this is a 5 minute red basing demand zone. But when you drill down to a 5 minute, when you go up to a 5 minute, it is a basing candle. So that's why you can't trade in a vacuum. You always want to look at multiple time frames to better enhance your probability of the trade working in your favor. What else took off today? Ooh, I think Nvidia was hot today. So we got 4 hour above. I'll be looking at that. But I think Nvidia is pretty strong. Has a pretty strong upcoming. So let's see what it did. Turn my pre-market off. So this is Friday. Damn, Nvidia would have been a good long today. Okay, so Friday, clean. Look at this. So, and just remember, this is all hindsight too. Like, it takes market experience and it takes confidence and it takes proper risk management and it takes proper position sizing and it takes you having the right mentality and it takes you not being scared of taking on your own trades in order to take plays like this because you truly don't know what's going to happen. This is why you got to be in the right state of mind. You can't be scared to lose money in order to make money. And this is how you get the confidence to be able to take trades like this or take trades in general. So we have a multi-day support here that formed, right? So we bounced here Thursday. This was, yeah, Thursday. Went higher, dropped back down. We weren't able to crack it again. So now, what am I looking at here? What does this look like? A clear double bottom. Boom. So now, if you had this support trend line drawn, you would have seen this. And this is what I'm talking about, trend lines. Here, we can draw a trend line here. So let me show you guys what I'm talking about. Okay, let me restore the cells. I'm gonna go to my charts. I'm gonna break it down to 2 cells. Oh my god. Now I gotta take all this damn shit off. Alright, never mind. I'm not trying to do all that right now. So let's go back to flexible grid. No, what was I on, man? Oh, there we go. Okay, maximize cell. Okay, so this is a 1 minute time frame. This is the double bottom that we were looking at. So let's go over to a 1 minute time frame and see how that double bottom formed. So now this is that W. We hit the price level, the support price level. We bounce, and then we hit it one more time. We aren't able to crack it again, and then this is when the W happens. So here, this is you can draw a trend line here. Connect this high. Let me accurately draw it out. Right there. So price respects this level. So now you can draw a trend line hitting this. So now we can expect Nvidia to either, when it reaches this resistance trend line, it's either going to do two things. It's going to hit here. So price is here. So it's either going to hit here and drop down, or it's going to do what it did. It's going to hold the support and fire off. So this is what I mean by getting super tight risk to reward. Because how do people play double bottoms? Let's go back to a 5 minute time frame. People usually play double bottoms with the break of the neckline, essentially, right? So if this is the double bottom, the neckline would be like somewhere around here, which is 495.82, like 496. Yes, is it a good entry? Yes, but look at how much um uh look at how much profits. I guess it's not a lot, but still I like to look for the tightest risk to reward. So if you're looking for the tightest risk to reward, you could have drawn that trend line expecting this with the bounce here. You would have um I'm not gonna say expect this to turn into a double bottom, but you would have played it in hopes that this support would have held, right? And you would have just let it done its thing, eventually turning into a W. So in that case, with the 1 minute, let's draw this trend line. We get this break here, right? So now this is the first demand zone that forms. This support line, this is the support that held Thursday. So now what can we expect? Market makers will make price drop below this candle wicks low, trapping shorts, and look at what happens. They immediately turn price around and make it rally. So what happens here? This is a demand. Right, not right off the open. A little probably like 20 minutes after the open, right? And look at what happens here. Just say you don't take this because it's too aggressive for your risk tolerance, right? You wait for the retest. It never even touches it because that's how strong this buying zone is. If a zone is really strong, you'll notice that the price won't even be able to make it back to the zone because buyers will be so eager to get into the stock. They won't they'll it won't even touch the zone. So, what you want to wait for to see you want to wait to see if we get this proper bounce, right? On the next 5 minute candle after this is another rally. So right here we have a base drop. I mean not a drop, is drop base rally, and then from here we have a rally base rally. So now this is the next zone that formed on BA today on the 5 minute time frame. So there you go. This is how. So I think I don't think Carmen mentioned this today, but essentially, how you would have wanted to play this is you would have wanted you would have expected price to continue in your favor. So what you would have been looking for is for an entry. If you were expecting that base rally, you would have expected to enter. You would have been looking to enter at the at the break above this previous candle's body. So the body was at the open was at 494.82. So once 494.82 cracks, you want to try to get your entry as quick as possible, because the more you wait, the more your risk to reward is skewed, because the later you enter, more appear. Now your stop will have to be at the low of the wick, and you can't, like I said before, you can't expect to risk nothing to make gains, because that's just not how trading works. You have to allow your stock to breathe, even if it doesn't work out automatically. So there's the next 5 minute demand on Tesla. So this is essentially, I'm essentially showing you guys how to train your eyes to look for these 5 minute demand scalps. And on a strong stock and on market trending days, these work phenomenal. And again here, we have this is already two zones on BA that formed. And we have another one here. This wouldn't have qualified, this one here, because the green candle afterwards did not fully engulf this red candle. This one here wouldn't have qualified because this green candle didn't engulf this, so there's no pattern here. Or maybe if we go a little higher. Maybe, but I'm still looking at this zone anyways. Yep, higher time frame, there it is. So you could have done two things. Or maybe even one on a 15 minute. Nope, 10 minute. So you could have done two things here. So I would have, since this red basing candle included the low of the pivot, because essentially what price did here is price rallied to this upper wick, and we went down all the way to this lower wick, and we came back up, and then we dropped down, and then this is when we shot up, right? So this is a low here with this red basing candle. Not the cleanest basing candle, but this is another thing too. You have to look at what price action is telling you. Like, even though this isn't the cleanest red basing candle in a rally base rally, price action is still respecting it, although the pattern sucks ass. So look it, if we draw it and we extend it out, we can see that price respected it really well. We never dropped to the low of the zone. We opened above it, price went back in, so obviously there was some demand here. There was institutional and big money demand here, because look at what happened with this candle. We opened here, we dropped down, we picked up all those buy orders, and we pushed price above. And then boom, we skyrocket. And then what is this form? Another demand. Like, BA was just on fire today. Demand after demand after demand. And then look at here. Bro, I could go on and on, man. Another demand. Boom. Clean touch before another rally. This, I'm just going to ignore this. This is not a pattern. So let's go back down to a 5 minute. Here's another one. Here's another one. I'm telling you, demand after demand. And to close basically high day. So BA was on fire with that news today. So I wouldn't be playing any of these like into the coming days. I would look to see where BA formed a higher time frame demand zone. Probably, I'd probably be looking at this right here. This one. So I wouldn't even draw this one. Sorry. So I would draw this 30-minute, and that's what I would be looking to play. I would just ignore all the intraday ones. And so essentially, that's that's how you guys look for those supply and demand zone patterns intraday. And the thing that makes it difficult is that you're usually typically we're looking at so much because for example, I'm looking at all these stocks throughout the day, right? I'm not going to be able to see every demand zone or supply zone that forms on the 5 minute. So it's kind of hard to catch these happen in real time. That's why you gotta just kind of focus on one and see what it does. But and then the thing with that is just say that for just say oh well, this the hell? Yeah, how did I get in the video? What the hell? I just realized that. Yeah, that was weird. Okay. Oh, okay. It's because I opened this up. Okay, but essentially what I was saying is that usually when you're watching so much, you'll sometimes see a potential pattern forming and you'll try to take it and it doesn't work out and it worked out on a different stock. So now those little nuances, sometimes zones don't always work out. So you just got to keep that in mind. That's why you got to position size accordingly. That's why you got to keep your risk management tight with these zones. And someone had asked me, how do you determine your proper stop? Your proper stop is uh, by a by definition how. Okay, I'm sorry. Not I wouldn't say by definition. If you're if a okay if you're playing a rally if you're playing a rally base rally right rally base rally if you're playing this in real time, if you're gonna take it long here, your stop is gonna be here, right? But if you miss this and now you're waiting for price to come back to touch this, if you're waiting for price to come back to touch this right here, so you're waiting, and it bounces like this, your entry will be somewhere around here, right? But by definition, sorry, not definition, by to be safe, I'll put it in that way. To be safe, your stop should still be the bottom of the demand zone or whatever zone you're playing because who knows, it might take a little longer for this zone to play out because you don't know how the zone is going to play out. But if you want to get a little, if you want to preserve, not preserve, if you want to be a little tighter with your risk, then your stop would be the low of the pivot, which would be here. Because we rallied, we made a low, this is a pivot now, we made a higher high, this is the new pivot, 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 and then we make a pivot here, and then a higher low, and then we take off. So now your stop would be here. So this would be the aggressive stop to calm your nerves. Sorry, not calm your nerves. This would be the aggressive stop, and this would be the more lenient stop. Lenient. Aggressive. Why lenient and aggressive? Because the aggressive stop, because now we don't know if, so this is the zone we're looking at. We don't know if price can literally just do this too. Bounce here. This is still in the zone. And then take off. So now you just got stopped out of your aggressive stop when you could have had your stop at the lenient stop below the zone, and price just took you out of the position, but it's still going in your favor. So now you're pissed off when you could have just went with the lenient stop, and now you're stopped out at a loss. So these are the little things you got to watch out for, but every scenario is different. So that's why you got to play it. You can't go into every zone thinking that you're just going to put your stop at below at the zone. You can't go into every zone thinking that you're just going to put your stop at the low of the pivot. Each scenario is different, so play it accordingly. And I think I rambled on. You guys are probably annoyed as hell with my voice already. We're at 47 minutes, so I think I'm just going to call it a video. Call it the end of the video. I can go on and on talking about these damn supply zones, but I get too hyped up, worked out, talking about this stuff. I gotta preserve my voice, you know what I mean? So I'll just call it a video there. Just a little side note, Tesla had a strong close today. Strong close. So let me just delete this to show you guys what I'm looking at for next week on Monday. Let me delete VWAP too. So I'm looking for this gap fill right here. Daily we got a little gap fill. I'm looking for this little gap fill right here. So we haven't been able to get above 409. So we had a strong close today on Friday. So most likely if markets decide to be green on Sunday, we will probably gap above this 409, this 409 level to rally us back to like 3 hours supply basically. So I'm probably going to be taking this long if the opportunity presents itself, and then based off what the market is doing, let's see if this 3 hour supply gets respected, and let's see if we get a good pattern that forms at the supply to try to take it short. But yeah, that's pretty much it for today. Let me know in the comments what I can do better, and let me know what you guys want to see more videos of. Shout out to Carmen for showing me all this. He's been a huge influence on my trading, and now I truly understand the importance of giving the stock some wiggle room, because essentially with these zones what you're doing is giving your price giving your trade a little wiggle room, because when you enter a trade you don't want to have a defined stop. You want to have a zone of your stop, and essentially supply and demand zone trading gives you that opportunity. So just huge shout out to Carmen. Go follow his stuff. Go take his course. Learn this damn supply and demand zone, because it will make you money, bro. So I think I'm gonna call it a video, and hit you guys up later. See you guys in the chat room later.